Let's look at the top 5 emerging market country interest rates. The big takeaway is that there's a normal yield curve in China. This is global interest rates in 70 charts. Welcome to the Become a Better Investor community. My name is Andrew Stotz. Let's get started. You can download my free 100-page March 2023 Global Interest Rate Chart book by clicking on the Get the PDF button at myworstinvestmentever.com or by clicking the link in the description. So let's look at emerging countries. What I see is China and Russia with stable interest rates, long-term rates up only slightly, and yield curve inversion is less severe except in Russia. Let's first start off by looking at an interest rate overview. Here we can see all of the major countries in the world in relation to GDP. I'm just going to go through the ones on the right, which are the top 5 for emerging markets. The first one is China, and 3-month yield is at 2.5, very low, very low. India is much higher and always has had high interest rates at 7.2. Korea is at 3.3 for 3-month rates. Russia is at 22.3 for 3-month rates, and Brazil is at 13.6. Now, keep in mind that Russia, I've had a hard time getting the Russian data for 3 months, so it's mainly going to be flat in my analysis right now. Now, the China 1-year yield was 2.2%, India was 7.2%, and Korea was 3.3%, and Russia was 10%, so much lower there, and Brazil was 13%. Now, for the 10-year yields, we can see China's 10-year yield was 2.9, and India's was 7.3. Korea's was 7.3, and Russia's was 10.3, and Brazil's was 13.1. Let's look at the changes on a year-on-year basis by country. Here we can look at the government 3-month government bond yield, and what we can see is that China had almost no change in its 3-month yield, up from 2.4 to 2.5 over the last 12 months. That's very different for India, which was at 3.8 for 3-month government bond yields. That went up to 7.2, which is up 3.4 percentage points. Then there's Korea. Korea was very low at 1.3, and it went up by 2.1 percentage points to 3.3. Russia was flat at about 22%, and finally Brazil had a small rise in 3-month rates. The key thing is Brazil had already aggressively raised rates 12 months ago. So what we saw is a move in Brazil from 11.7 to 13.6, which is up by 1.9 percentage points. So very small move for Brazil on 3-month rates. Now the 1-year yield increases are most prominent in India and Korea. So let's look at India and Korea. But before we do that, China's 1-year yield was up just 0.1 percentage points to 2.2, so basically flat. India was up 2.9 percentage points all the way up to 7.2, and Korea was up 1.6 percentage points to 3.3. Now, where it gets interesting is that Russia was down 4 percentage points. So 1-year yields was up at 13.9 at the start of the Russian invasion, and now they're down at 10%. And for Brazil, basically, 1-year rates are flat at about 13%. Now, let's look at the 10-year rate to understand what's happening there. Basically, the 10-year yield curve hasn't changed significantly among emerging countries. Here we can see that China, 10-year yield was flat. India was only up by 0.5 percentage points to 7.3. Korea was up by 0.4. Russia was down by 0.8. And Brazil was up by 1.1. Basically, what you can see is all of the short-term increases barely affected long-term rates. Now, it's important to remember that many countries in Asia and in emerging markets around the world never had the luxury of keeping interest rates super, super low. And that's the reason why we don't see a huge move in 10-year rates now, because they were already higher than, let's say, U.S. rates going into it. Let's look at the rate progression over time. Like I said, the Russia number, I haven't been able to get an update, so I've kept the last one that I had, which is about middle of this chart, and that's about 22%. Now, the 3-year yield was quite stable in the emerging countries. Overall, emerging countries have been more cautious in adjusting their short-term rates. We haven't seen a huge increase there. Now that one-year yield was volatile in Russia over the past year, and other developed countries remain flat. And the 10-year yield almost stayed constant in all emerging markets, so no major change there. Emerging markets have been borrowing at relatively high rates for a long time. They just don't have the luxury that the U.S. has. So now let's look at the yield curve. What can we see? Well, China's yield curve remained constant over the past 12 months. Basically, both short and long-term rates haven't moved much. As of March 2023, the 10-year yield remained about 0.4 percentage points higher than the 3-month yield, and therefore we haven't seen inversion. Now, for China bears or people that are worried about China, if we saw an inversion in China, it could be pretty significant. And so China's trying to prevent having to do such a huge increase like the U.S. Fed did. India's yield curve flattened massively and looks set to invert. 3-month yield almost reached the same level as 10-year yield recently. This is a massive change year on year, as the yield curve was pretty steep back in March of 2022. Korea's yield curve has inverted very slightly, but basically Korea's yield curve has gone from slightly normal to basically flat. And Russia, yield curve has stayed inverted. Both long-term and short-term and long-term yields haven't moved much. The key thing is that China has a massive gap between its short-term funding, which is as much as 22.3%, and its long-term funding, which is at 10.3%. And so that's a 12 percentage point inversion in the yield curve. Brazil sees yield curve inversion widening, but still it's not a massive inversion. In fact, for Brazil, I would say that the interest rates are flat across the different maturities. So what are the key points in the bottom line? India, Korea, and Brazil raised short-term rates significantly. China and Russia were stable. Long-term rates are up slightly in all emerging market countries, but increased less than the world. And Brazil and Korea saw yield curve inversion recently, and Russia remains the worst, most inverted. China and Russia with stable rates, and long-term rates are up only slightly, and yield curve inversion is less severe except in Russia. And that's the bottom line. Remember that you can download all of these charts and many more, 100 pages of charts, for our March 23rd Global Interest Rate Chart Book by clicking on the Get the PDF button at myworstinvestmentever.com or clicking the link in the description.